Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this wrap-up is for Monday, the 29th of March, 2021. We're about 7:05 at night. Just getting ready to put out my written updates for my other subscribers. But if you look at the market, pretty mixed. We had an interesting day in the DIA. The SPY was down, QQQ was down, gold down, but GDX was up. So what's going on with GDX? Do the people there know something that we're not seeing on the futures side or anywhere else? Because futures were down pretty hard today, but those gold miners got a bid. Silver was down, and we saw the energy markets come back a little bit. Still a lot of problems with the Suez Canal, but the Glen, is it called Glen Ever or something like that? That was freed up. And now the ship is wherever it's at, but it's not blocking the entrances and the main entrance, so ships can come back and forth. They'll start their process, but I understand there's nearly 500 ships backed up, and they do 51 a day. I don't know how they're going to get all these ships to catch up in time, so that should get very interesting. In GameStop, you are fighting a battle at the 18-day average of closes. The trend is still down with lower highs, lower lows, but I question if you're going to gather any real interested in shorts here with the market this oversold. Should the market get over 218.93, you'd end up possibly with a pattern of higher lows and higher highs. I'm assuming that low wouldn't take that out if that occurred first, and that could set up a challenge of 281.98, so that would be interesting. We know what the bears have to do. They have to defend that. AMC is the same thing. The battleground has turned out to be the 18-day average. The trend is down, and it can flip on you like that if prices get over 1153. Same pattern. You could end up with higher lows, higher highs. 1494, the upper Bollinger Band. Bollinger Bands are not the only target. I'm sure you know that. Window envelopes come in. There's other price counts, as we call them here. So there's a series of tools. I take out most of them. I only have a few that I use because I found them to be, for my style, the more reliable. For my style. I'm sure other people have other things. In PAVE, well, you made a new high on the move, and of course you did. You saw President Biden talking. He's going to try to get through that $1 trillion package just for infrastructure, then another trillion for social services, schools. There's about $3 trillion he's going to try to get through. Big battle brewing over all this money. Where's it going to be paid from becomes one of the key factors. Do we need infrastructure in America? Yeah. Don't let the others say, no, we don't. Who's going to pay? You've got to get it done. You'll hurt the economy without it. Your bridges and roads throughout the country. It's not any one area. They're old and they need replacement for this day and age. PAVE. You've got the pattern of higher lows, higher highs with a bit of a back off there. The market pulling back towards that potential of the 18-day average, maybe. Where did the market make a run for? The upper Bollinger Band, it just missed it. And what about momentum? Overbought. Now keep in the back of your mind also that tomorrow's Tuesday. So Tuesdays are often reversal days in the stock markets. So something to watch there. THCX can't hold its high. Pun on words. But that was the high, and it's come back down to earth. And the market's got lower highs, lower lows, but I have no interest in this sell side. As you're oversold, I can make an argument. Maybe you can get to 1776 or 1655. I can also argue to get over 2015 and you negate a lot of this bearishness. In SMH, and this is the semiconductor index, okay, we haven't gone back up for new highs. We haven't solved the problem with semiconductors, and they're not trending on this index. You have a higher high and a lower low in an overbought condition, and the bias is up since you're over the 18-day average. Look for that 18-day average to be the battleground number. In the industrial sector, a new high for the move. We know why, right? All the money that we've thrown out at the market now and what we're about to throw. So the market's looking at it. Lower low, higher high, and overbought, however. When I look at the slow stochastics on XLE, all you've done is come back up to challenge possibly the 18-week average. I find it hard to believe this market's going to be able to get a new bullish trend right here, but it could happen. It's not right now. The market's got nothing. It's got a bear market rally because you're under the 18-day average of closes, so the bias is down, and that's the likely target if it can make it. When we look at SPY, you have a lower low, higher high. You've been fighting a battle at the 18-day average, stuck in the Bollinger Bands. We see the bias is up because you're over the 18-week average, but you're overbought as can be. I'd be a bit concerned with the market, period. EFA, and I'm not super bearish or super bullish. I'm just concerned that it's churning more than anything. When we look at the emerging markets, what's going to make this go? What's going to make it go is when we get the vaccines out to them, not beforehand. So you can have all these plays you want. I just think you're building a long-term base. I'm still convinced that if the vaccines make it to the Brazils of the world, Chile, Peru, India, I can go on and on. You know, think of these emerging countries as we like to call them. I think the market has a shot then to take this and look higher, because at that point I'm looking for interest rates in the U.S. to reverse course. Right now the dollar wins by default. We have everything going for us as others are trying their best to get their vaccines out into the populace, and we've done that. GLD, well, nothing. And that's what I was fearful. Remember I was telling you last week, you're developing that sideways action. You don't generally do anything from that. And that's what I'm seeing. I was surprised today, though, with the gold miners. Now, this will prove to be a bull trap if today's low is taken out at 32.08. Until then, believe it or not, the bulls have wrestled control. They have a higher low and they have higher highs. 32.93 today took out 32.80. So they have to defend this 32.81 level and not let it get back under 32.09. If it does get under there, wherever that Bollinger Band comes in, I'd expect it to be a good number. And if they can pop the market here, well, then they've got to prove that they can get gold going with it. I have my doubts that it's going to just run without GLD going with it. On interest rates, I looked at this as the low area going into the FOMC meeting, which is right here. The market rallied back up, and now it's sort of in no man's land. This was a bear market rally that failed against the 18-day average. It kept the bias down. You're out of an oversold condition. To me, the bears still have control until you get back over those highs and stay over them of 38.66 and over the 18-day average. Last in FXE, the market's probing the lower Bollinger Band. Again, a COVID issue. That's what is pushing on this market. So as I see it, until the COVID issue is done, these markets, they'll get bounces along the way, but they won't hold them until that happens. Let's hope it's sooner rather than later. Embedded reading developed down here, still very much in the bear camp. Now, I'm coming out now. I finished the course. So the online enhanced Bollinger Band course, I have finished. I learned a great tool on Sunday, unfortunately. I was doing my last review. I was reviewing the chapters, and I needed another one to prove something, and I couldn't find it. And I kept going back. So I took every futures contract, and I kept going back. I got back to 2004, and I saw something that I learned. And an event I thought happened regularly doesn't happen. But it doesn't happen regularly. That's the same as a win. So got a new thing, a trick in there. I went in and cleaned up one of the chapters, reshot it so that I explained that to people, and it's in the course. The course will come out this week. If you're a paid subscriber to any of my research, just go to www.iraepstein.com. When the course comes out, you're going to get an approximate from the price of it. I guess it's going to be 20% or so. So it's a pretty good discount on the course as a paid subscriber, and the rest of the people can pay retail. I'm Ira. I think you'll see things different. I'll see you tomorrow. Have a great day.